Hello, how do you spot pullbacks to trend lines? Swing trading chart analysis for beginners. So, how do you spot pullbacks to trend lines? We are going to analyze two stocks here, and the first one is PCAR. PCAR. In this example, we are using a Thinkorswim platform, and to spot the pullbacks to the trend lines with the strategy we are using, which is long up trend line swing trading strategy, those are the trend lines that we are going to be targeting. And those trend lines, they are longer than 1 year time frame. You have the year on the x-axis and the price on the y-axis. So having your trend line passing by the higher lows of the chart with this long up to long swing trading strategy, you can target them as your entry point. So with PCAR example, it reached a new high at some point here in 2024. You have the dotted lines delimiting the years, and then it pulled back. So when it pulled back to this trend line here that originated from 2022 or so, and it could well be the support line of the upside wall of the mountain, but it pulled back to it and start going up a little bit, but was not able to go past where it was before, and it pulled back again. So when it start making lower lows, then you know that it's pulling back. But whether it's pulling back to the trend line you are targeting to enter is another story. In this instance though, we traded in 2024 using short up to long swing trading strategy. So the arrows at the bottom pointing up shows where we bought the stocks, and the arrows at the top pointing down shows where we sold the stock. And then the last time we purchased it was right at the tip of the mountain, or the peak of the mountain, and then it pulled back. So it pulled back to this trend line here, and then start going up again. So when it's making lower lows to the trend lines, then that is a pullback. So it rested there for a little bit and then went up and pulled back again. And we purchased some more here, thinking that this might be the valley line that it wanted to rest on. But guess what? It continued to pull back again to this one here, and then start going up from there. And if we want, we could purchase some more here as well if we have a confirmation that is going up. Here we have an upward trend line there that is giving us an indication that it is getting ready to start going up. So you determine your entry points with this strategy. They are the support line passing by the valley of the mountain. When the stock is pulling back to it, you will just keep observing it without taking any action. Once it touches base with the trend line you like to buy on, then you will start waiting to see if it will continue to it will start making higher lows. So we can get close. We are using a maximum daily chart. And now let's zoom a little bit closer, so you can see that when it's coming down to this purple line, is making lower lows. For instance, this low is lower than this one, although this one is higher than this. No, hold on, let's take it from let's take it from the bottom up. So this low is lower than this one, and this one, the red bar, for instance, today is September 20th 2025, and the market closed on the 19th 2025. So you'll analyze the chart after the market closed, and yesterday Friday the price dropped. So that's why the price is in red, and that's why the bar is red. That means the price at the end of the day was lower than the price in the morning when the markets open. So those are the red bar. And the green bar is the markets close at a price higher than the price in the morning when the markets open. So you will compare the red bars delimited by the green bar. So this pullback is lower than this one, which is lower than this one, and so forth. So that tells you that it's pulling back. The stock's price is dropping. So, and it came here, we bought some more when we have a short confirmation that it start going up, because the low here was higher than this one, which was higher than this one. But guess what? It pulled back a little bit, went up, but then continued pulling back again. It was not down. And it reached this one here and start going up from here. So let's see, this was in April, and now we are in September. So it was a while now that it has been going this way without going down any further. I could say that, let's see, from here it was in February and here was in April. So 2 months time from here, and this one is longer and it's still on that range. So I will say that it could well be done going down. It won't go any lower than that. It'll just start going up from there. So we have our trend lines here that we trace, which is a little bit oblique, and that just another indication that is going up. The pullback ended. So this low here, we don't know if this low ended or if Monday is going to be red again or not. But until then, we can compare the last one to this one. So this one is higher than this one, which is higher than this one. Although this one is lower than that, and this one is lower than that. So we have a little bit drop here, but this is a little bit higher up compared to this line. So it is okay. So we have this low here that is higher than this one, which is higher than this one. And then we have this that is kind of higher up and didn't touch base with it. So we could well say that it is done going down, because it has been around this area for some time now. There is a chance it can continue going down again. But let's say you are wondering if you should buy it in or not. Here is the things you'll take into consideration. Let's see, you have 2 lines here. So you don't know if it's going to continue going down or not. You can buy some shares and see if you are okay that if you pull back, you might buy some more, or you'll just wait in the trade until it's getting ready to go up. That is the decision you have to make for yourself. As for me, that purchase here, and I didn't sell it because I don't want to sell it at a loss. I know it's going to go up at some point. So my money is pretty much trapped in that inventory of stocks that I'm holding in my portfolio. It came down here, I purchased it again. So the total, the cost for overall is going to drop because of this purchase. So now that is around the line that I like to actually buy it. If I want to purchase it again, then at the first or second green bar that will follow this red, that is where I will buy. If let's say Monday it is green, I could purchase some share, but I'm not going to purchase any because I don't have money in the account to buy more stocks. I have a lot of stocks that are negative in the account, and I have some stocks that are positive in the account, and the ones that are positive, I don't want to sell them because I know they could go higher. So therefore the current capital is in stocks, so we have to put more money in the account before we can start buying stocks. And for the past few months we have to save money to for some expenses around our house. So therefore we have now really invested this year. We were just using the profit and the capital we have in the account to buy more stocks. But since I'm using long option long swing trading strategy, one thing I notice is your money will be stored in the stocks you are holding in your portfolio. In contrast to short option long swing trading strategy that I used last year, most of the capital were liquid in the account because every few days I was buying and selling stocks, so I was not really holding stocks. And that's what I noticed. I noticed this strategy compared to the short version of it. So, and because the account is now large, we need to keep investing anyway. So therefore we'll need to put more money. So that's one thing you will need to understand. Compare long option long swing trading strategy. You will hold on to the stocks for a longer period of time. Therefore, it is good. Periodically, you save money and put in the account to have liquid there to buy more stocks when you find it, at a position. The good news with those large cap stocks is they do not fluctuate too quickly. Therefore, you can see that from April to September, it's still around this area. It's going up a little bit though. The price, when I put my mouse here, the price here, and here the price there. So it's going up a little bit. But again, you are not really targeting buying it exactly at the trend line. But you just want enough confirmation that it's done going down, it's done pulling back, it's getting ready to start going up, and then you purchase it. And because of where you like to exit, which is going to be the next new high, you wanted to take that into consideration to see where the price is right now in relation to the trend line where you want to buy it, and where you like to exit, to see if where the price is closer to your trend line compared to where you want to exit it. You want a good margin in it. But it's not that if it's starting that low, it's going up, it's not that when it reach it you will get out of the trade necessarily, because when it reach it might pull back a little bit and then start going up again. So it might do that for a while. So once you reach the new high, you'll compare how it behaved the previous time before it pulled back again to the trend line you purchase it at, to determine if you want to stay in the trade longer or if that's enough profit for you to get out. So for in this sense that we purchase it at a higher price, I don't have anything to lose if I buy it around this area again. If it turn around and start going down again, then it'll be 3 points that I will, still stay in the trade. All of those are possibilities. It can happen. So, but that's why I just prefer to trade the same stocks over and over and over. That way I can get a feel of how those stocks price behaves. The thing is, this has a pattern that it tends to go sideways, go up sideways, and so forth. So I'm not sure if that's what it start doing this around this area. I'm not sure. Time will progress a little bit before you can have a big picture of the pattern. Sometimes when the pattern is designing, the price is designing a pattern, it may not be that obvious to you. So as more bar are added to the previous one, then you might have a feel of the big picture of the pattern that the price is designing. So Now the next one we are going to analyze is PJ. I put here that I'm going to remove it out of this list pretty much at the end of the year or so, because I just feel like the pattern, it might be a great company, but the pattern is just not something I wanted to swing trade. It has a lot of jagged teeth that, although it's upward stocks, it's just I'm not sure. And the last time it reached a new high was 3 years ago, and that's why I'm thinking the next time it might do, it could well be another 3 years. So if I'm using the support line as an entry point and the new high as an exit point, I could well hold on to this stock for 3 years. So that is why I wanted to take it out of the list, because between this peak and this peak, it just did this fluctuation around it. Yes, the price was going higher, but you'll be accumulating profits in it. But if you are using the higher peak as your exit point, because once you reach it, it pull back. So, and once it reached it, pretty much it pulled back there and then went back up, but didn't go. So pretty much it's like, in fact, it reached somewhere here, pull back, went a little bit, it didn't really do it for long, and then it was done with it. So, and that's why I wanted to take it out. And again, right now it's pulling back to the trend line. It's now around the trend line. Let's say we want to buy it. Now that it's around the trend line, we'll pay close attention to it, and then we can trace this line here. In fact, we want to touch that low. The second one will be this, and then we'll go from there. So if I do that, you'll notice that here is lower, is below the trend line. So if we zoom it closer, we can see that it start making higher lows. This is higher than that. This one is higher than this, although it's lower than that one. But then from here, those were below. Yeah. This is higher than this one, but this is lower than that. It's lower than this one, but it's higher than this one. So it's below the trend line here, around this area. So whether it's trying to go lower before or not, we are not sure. But again, you're just trying to locate few higher lows. We have few higher lows here, but then it went back down. So that means you'll start observing it again. You want to have few higher lows. It's like this one avoided. So you start looking at it again to see if it's going to make few more higher lows here. Without you taking this into consideration, you want to start over here again. Once you have about 2 or 3 higher lows here, you can buy at the first or second green bar that follow the previous pullback, the previous higher low, or something like that. So you pretty much wanted to buy around the trend line. It pulled back to it, went below it, and start making higher lows, but then pull back again. So you want to start over and wait for 2 or 3 more higher lows here before you buy. But and that will be the entry point at the pullback. But again, targeting a new high to sell the exit point, it could be well into a year or 2 or so. So if you are willing to keep it in your account, earn some dividend while the price is going up, that is the decision you have to make for yourself, because it does make just quite a bit of up down like that. That is the reason why I'm not interested in it. So we can try to look at it even as a bigger picture by going to the maximum monthly chart to look at it. So when you are looking at it on maximum monthly chart, you'll notice that is upward. but it's just that the high here, when it reached a new high here, it pulled back before reaching it here again. So, and that is why I'm not a big fan of having those not higher up than the previous one. That, you know, that's why, yeah, that is why it just pulled back quite a bit. That's those peak here are not higher than the previous one, so it took all the way to here before. So that is why I'm preferring to take it out, because there is a chance that it is going to make those shorter mountain for a while before it's going to make a bigger one again. So it's not that the stock is bad, it's just that I don't know if I wanted to stay in the trade for that long. When I intentionally, so that's just unless I'm investing. So that is how you spot a pullback to the trend line, that you like to buy at, and make a decision if it's time for you to buy some share or if you prefer to wait. And at the entry point, you can compare how the price is behaving there to the previous time. Once you start seeing you are ready to make a purchase, you can see if it lingered there in the past or not, to just ensure that, well, it's not going to go sideways for a while first, but it's going to start going up again. So those are decisions you have to make, and we just rely on how the price behaved at that same spot in the past to make our decision whether to sell or whether to buy. Thank you so much for watching our videos. We thank you very much for your time. We thank you very much for all your comments. We thank you very much, you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. It's just one stream of income that you are trying to create in your journey to reach your financial independence. Just as small, one share at a time. Once you can confirm that your strategy is working well with the stocks you have in your portfolio to increase your profit, you just buy more share. You notice that PJ, I put a note there that I like to take it out. So by just buying one share of a stock at the beginning, you'll be able to stretch your money. When you start with a small account, you can stretch your money by buying multiple stocks in your portfolio. When you just buy one share, you are not targeting a lot of profit. You are an apprentice. You are trying to see if the strategy you are using is working well, if you like it, and if the stocks you are trading using that strategy, if they are comparable to your strategy. And then you just keep turn over your stocks in your portfolio until you have a list of stocks you can analyze within an hour or so every day after the market close or early in the morning before you go to work, and that are comparable to the strategy you are using, that you took time to customize to your liking, to your risk tolerance, and to your personality type. And from that point, you know that to double the profit you are making, you just need to double the number of shares you are buying. Thank you so much for your time. For more of swing trading related videos, will you please check the playlist links in the description of this video. Thank you.